So welcome to the show, Josh.
Hey, thank you so much, Brian.
Well, this wouldn't be business with beers if I didn't ask you. Me and you are outside Renault on this beautiful day. What are we drinking?
Oh, for me, it would be an IPA, and it would be IPA almost every day, all the time. If you're offering me a beer, I always choose IPA.
Okay. Anything in particular?
Here we have Hidden Sands IPA, which is a local brewery with which we've cut a killer promo deal with. So they take great care of us. If it's on the road and I have to get another beer, you know what I'm drinking a lot whenever I buy beer? It's Cape May IPA, which is not national but regional. Boy, is it great. And I remember when they created that brewery, so I'm very proud of how great they are.
Awesome. I'll have to check those out. So if you could share your story, who you are, what you do.
Sure. You know, Brian, we had you on our show, so I'm just honored to be on your show. You did a great job on capital hacking. My quick story is today I'm a proud father of 10 children, which is, take a deep breath, it's the truth. It's shocking even to me. I grew up with one brother, grew up pretty humbly. My poor mom had a stroke when she was a kid. My dad was gone. So we loved working since I was 12. That's kind of the core of my story. I love working. And so it went from paper routes to dishwasher dude to kitchen, pizza guy, all the way up to all kinds of different hospitality things. Then I get a degree and we get this cool opportunity to work for a billionaire, help him start a college, ironically, which is a strange thing to do for a billionaire. And then we did marketing for him, traveled the world. Fast forward, Melanie and I got to spend 4 years in Europe after helping a guy get a school started. We got a job to run a campus in Austria, Europe. So that changed us a lot. We became really into the aesthetic and the natural experience of hospitality too, and buildings and history. And there you go. That sprungboarded me into land development. I ended up getting back to America in 05, 06, met a very successful family office. I became one of their top guys in the family office building buildings. And that allowed me to jump into construction because it was the heyday where there were so few construction professionals to hire that as long as you were a good detail-oriented dude and you cared about the family, you could actually learn on the job. And we did. We did about $50 million of luxury house flips on the water for the most famous people in the world, including the guy who owned the Phillies and other famous people. And that sprungboarded a couple more things. And then eventually for the last 10 years, I've been a nationally known developer of resorts, but really in a niche called restoration redevelopment. And that allowed us to focus on the service of hospitality and beautiful buildings. And if you've ever heard any of our other shows, and I've been on a fun one, including Bigger Pockets Business, where we dove deep into the culture. And we can touch on these things later, but we've fallen in love with the way you can serve the heart and soul of a guest by focusing on the deeper meaning of hospitality. And that has really led us to where we are today, where now we lead a group of investors. It's called Accountable Equity, and we buy the buildings. So we're not just running them, which is a great gift and a skill. We're actually helping families all across the country, like the Beers family, get involved and own a piece of a resort and the upside that those things can create. So that's my whole story in a nutshell. Very happy.
Yeah, that's amazing. 10 kids. I don't know how you have time for work when you got 10 kids.
Yeah. Well, Brian, you'll think of it the way you run businesses. I know all about your expansion plans. Think of it as like I delegate the olders to help the littles. The mids have to help the littles. Everybody has to help the littles. So it's like a small incorporated business when we have different age groups like we do now. So
it's like the who, not how. You just have the who is the older kid.
The older kid.
The how is not the how dad's going to do it. It's how your oldest kid's.
Yeah, that's a great point. And by the way, we sometimes call it. We joke it's like the way to raise a kid is like it's like a baby boomer way of raising them. We're not all over each and every kid. We have certain expectations. We love them like crazy, and we show that. And yes, there's all the mess of a normal family, but in general, the older kids helping is just good for everybody's psychology and their psychology, that they're not here to be given gifts. They're here to be a gift to others.
Yeah, that's great. Teaching them responsibility and taking care of others as well.
Absolutely.
So great. You said so where are the resorts located? Let's start with that.
So when I worked for the family office, which I no longer do, we did 3 in New Jersey along the water. Beautiful properties from Cape May to Avalon to Diamond Beach. We no longer do that for that family. We were able to start our own company now, and that does properties in New Jersey as well. We have the Renault Winery Resort, which is in driving distance of Atlantic City and New York City and Philadelphia. So it's kind of, if you're not familiar with the area, it's pretty easy to get to for most of the Northeast, but it's big. And then we also acquired down near Annapolis on the water, huge 1.7 miles of waterfront called Kent. And we currently have 3 deals in the hopper that should close by the fall, if not late summer. And that'll round out this year's growth to about 5 assets by the end of the year.
When did you buy the first one, Renault?
You know what? We bought it 2 days after Christmas 2018. So I'm going to say 2018 because that's the truth, but it feels like the first day of 2019 we bought it.
Okay. So from buying 5 in two years, right?
Yeah.
Pretty much.
And the point is we had the last 10 years to map out this growth plan that we've been dreaming about. And in my first entree into this world of land development in the space of hospitality, I worked for this great family. Well, they obviously were at a more mature point in their life cycle. I'm in my 40s, and we had been charting out this path of how you do it, how you hire the right people into leadership, how you methodically chart out your course of markets to attack, and how you drive revenue and take the risk out of it or reduce the risk as much as possible. So, in a way, it's been incubating actively for 10 years. Yes,
you've had this education through the family office of how to do all this stuff, probably on your own, wrote probably many process guides and put together this whole plan. So you were ready to go. You hit the ground running. It's not like you were figuring.
That's exactly right. And I think we met you a year or so ago. Mm-hmm. Maybe at that point, by that point you might have realized we're a growth company. But you're right. Early on, when we were buying the first asset with our investors, they probably thought, "Oh, what a great trophy asset for that family," whoever that investor might have been. And I kept saying, "Great news, it's the step one." And they probably didn't know what I was saying, though I've been transparent from the beginning. I'm like, "No, seriously, we're building a system to buy these, restore these, and reposition them. And by the way, we're a portfolio, right? We're not necessarily flippers in that sense. We see incredible perpetual wealth building for our investors. So we keep these and use the refinance BRRRR model to get everybody really whole and back with all their cash pretty quick."
Okay. And so it's a syndication. So you're the general partner and your team, and then you have passive investors like myself and others who then invest passively. Right. We own a piece of it, right?
Exactly.
And how else does it work? What are some of the benefits to the investors? Why would someone invest with you guys?
Yeah, I know your business is great. The way you build your business, I'm a big fan. I think I could learn a lot from your process structure and the way you're starting to rapidly grow as well. I think the benefit to investors with us is, if anybody who's listening now has ever dabbled in learning about owning multifamily buildings through syndication or owning self-storage, then maybe you have already opened your mind to the idea of what it would be like to have all the economic benefits, the real estate, depreciation, tax strategies, and owning a cash flowing asset. Then think of those asset structures and just overlay a Renault or a resort, and I always tell people, think of it as a multifamily syndication with a lot more revenue and a lot more ways that a sales team can add profits and therefore wealth. So that's how we approach it. We approach it as a gigantic piece of real estate, which has intrinsic value and has wealth potential, and we like to add layers of revenue. Now, if you're someone who, by the way, you and I, Brian, have hundreds of friends that have never invested outside of Wall Street, right? Yep. Mm-hmm. But for the families that are listening now that are like, wait a second, I'm confused. What is he talking about? Is this like a stock? Is it like traded on Wall Street? No, it's not. And if you've never left the Wall Street model, it can be a very big change, but it is a massive benefit change, right? On Wall Street, we follow the valuations that the market says is going on with all of our stocks, and we can benefit from that. But really, I always remind everybody, are you really benefiting in the stock market? So if your stock for Amazon went from thousands to 2,000, did you make money? Not yet, not until you sell the stock. And I always try to help people realize, think of it that way. Think of it as a goose at Wall Street that you're happy if it's getting fatter because the TV's telling you, hey, that Amazon stock got fatter. Think of what we do, you and I, Brian, where the goose is actually getting fatter for us too, but we own it and it lays eggs. It's one of the fertile laying egg gooses because we try to take cash monthly or yearly and the goose is getting fat. So it's like so much better than just a Wall Street portfolio that it's hard to even jump over that chasm to believe that. And so finishing this point, that question of how does it work? Is it good for most families? I always say we're never going to be able to just say it on a podcast and have people get it, epiphany. It takes a little bit of time, to believe and to see how this works. That when you own the building, which Brian Beer's family, you guys own a piece of this piece of real estate, therefore you're entitled to the profits, therefore you're entitled to the refinance capital, therefore you're entitled to passive fake losses, I call them, depreciation. And you mix that whole soup up together and your potential is big to earn. By the way, it's fun too. I should just throw that out there.
Yeah, especially you can go there and you can feel like you're a part of it. And I know you have some investor-only meetups and education. Can you maybe speak to a little bit about that and what your goals are there? Well,
when we left working for we had all the capital in the world in my early life. They had the capital, and I was able to build these business plans for this family. So capital acquisition or attracting investors had never even shown up in my repertoire 4 years ago. And then I started to meet people. I met Dave Zook, who some people know, who introduced me then to the Real Estate Guys Radio podcast. And years ago, I started going to their education. I brought my lovely wife, Melanie. And it just, wow. I started realizing that if you open Pandora's box, there's a whole nother world of owning and building wealth is through ownership of assets. And then with Melanie and I fell in love with the idea that it's actually our favorite part of all of this is that investors join us side by side, and we can, in a way, we're providing access to types of deals that are usually not available to anybody other than the ultra wealthy. If you look at all the resorts you've ever been to, if they're gigantic, like $500 million or $1 billion, those types of special things like on the West Coast or whatever, they're owned by REITs or by large hedge funds or large private equity. Then you go to the ones that like we buy, where it's, $20 million stuff, nice, beautiful stuff. They're owned by large families typically. And so how does anybody get into this game? And so we feel super grateful to be a stepping stone into this cool world. But we said, since it's such a new thing to so many people, we need to keep education as the core of how we recruit. We recruit new people slowly, and we let everybody get to know us as people, and we do that through in-person events and education. Anything we can do online, and pretty much everybody's welcome to learn how this all works.
Okay. In your classes, your meetups, it's general real estate too, right? I mean, obviously you talk about syndication, yes. But it's cash flow, it's depreciation, it's probably.
You know what? That's a good point. You're right. I mean, Chad Gallagher, who I think is a friend of both ours, he just gave one of the keynotes at we call that event Learn and Grow you're describing. Yep. Mm-hmm. We try to make sure they happen every quarter. Pandemic messed up a few of them, but otherwise we're back on track now, and they're happening every quarter in person. And we just tell the investors, guys, it's a way for you to get to know all of us in person, even if you have not yet invested. So people don't have to be cash investors yet, but they come, they learn a core content piece that has nothing to do with the deal. So Chad came and explained how depreciation works. So yeah, we make them educational based on the tools that wealthy families have always known, but for those of us growing our wealth for the first time, we never knew existed. So it's kind of it's an education. It also gives everybody a chance to physically see the deals that we run and whether or not they like the way we run things. And it's a long-term nurturing program because we don't think we're not going anywhere. So we might as well invest for the long term and get to know good people.
That's great. Can you speak to what is your long-term goal for accountable equity? Is it a number of resorts? Is it dollars under management? What's the vision?
Yeah, we talk. You know what? That's a great question. We do not talk in assets under management value. We talk in head count. Though we could do either one. We know that we are called to do 100 resorts by 2035. And the way we envision doing that is through team development, like focusing on our human capital first. So if you've been coming, some of our investors have been coming to every single one of those learning grows. They've seen us go from one strong executive to 7 right now. We have 7, and then we also have strong executives in construction. And these are experienced people that care. And so our strategy is it's organic growth right now. We'll be at 5 and 2.5 years, 3 years. But then there'll be pivot points, right? Because what I'm finding is we're prospecting purchasing this year. Some people own multiple, right? Remember I said it's that wealthy family that you always knew they owned that pretty resort in Cape May or whatever? Mm-hmm. Well, they probably own 3 others. You didn't know it. So when you buy the one, they might want to sell you all 3 and be done with the business. So we see portfolio acquisitions coming over the next few years.
Yep, especially as you guys get bigger and more well-known to take on that bigger deal. From the seller's standpoint, looking at you, it's a lot more feasible than, hey, you got one tiny resort, like, they got 5 or 10 of them.
It's a methodical strategy, and we've been transparent about it. You said it perfectly. I see it happening in your business too, as you're acquiring companies. It's a similar concept. And by the way, it's similar to you. There's a family on the other side of the transaction. You're not buying it from some cold, distant person, in another city. You tend to talk to the family, right, Brian? Mm-hmm. And they need to trust that you're going to take good care of their building and their business, and that's what we start with. Is letting them know that we care about their business and their legacy, and it's a nice program of acquisition, to be honest with you.
Yeah, and for us it's similar. It's first we have to create bond and rapport. People have to like you to want to do business with you, and they have to trust you. You then need to figure out the why, right? So you got to ask questions to figure out truly why they want to sell. And so for that family, maybe it was the father who maybe died, who it was his love and joy, but the kids don't want it, and but they care about the employees, they care about the history, right? And knowing that, then you can speak to how you're going to carry it forward, and that's what's important to them. Maybe it's not, maybe it's something else, and if you figure out what it is, that's, you want to solve their problem. So,
you said it perfectly, Brian. And that's why I do admire you, because you're methodically doing the same kind of thing, and you're doing it more often than I am even. And it is the exact same step. As a matter of fact, you just described our current project under contract right now.
Okay.
Is the father had built it for 15 years and then passed, and now the family's ready to let it go.
I mean, to be honest, I think it's every acquisition for the most part. It's a similar process, whether it's auto repair shops or whatever we do, and hotel, hundreds of millions of dollars worth of hotels you're going to buy over the next couple of years.
Oh yes.
It's all people, and it's all just solving whatever their whys are. So we sometimes
make
things more complicated than they probably need to be.
Yeah, and I know you your heart, so I know you actually do cherish those people that put that business in place. Yeah. And their legacy matters to you, or else you wouldn't be buying that building and business. And same thing for us. And so when we're speaking to them, we did this whole presentation 3 weeks ago to this great family, and we showed pictures of them and what they had done. We're like, see, we get it. We know you put your heart and soul into that building. And we know it's profitable. You're not stressed out. You're not bankrupt. Okay, you're actually running a good business right now. It's just the driver of the business is gone, and you're ready to let it go. So we're the right people to shepherd your legacy.
How do you go about determining the valuation of a property like that? Like, they have a number in mind, right? That they must, but there's not a lot of buyers of this type of thing. So is it more just they have a number that they think they want to walk away with, and that's what they see the value?
The answer. Sorry to interrupt you. Go ahead, finish it.
You're good.
The answer is 3 things happen in those conversations. You're right. Number 1 always starts off with, we've spent this much on the building, and we've actually spent this invested capital. We will not sell for less than that. So that tends to happen with a more mature seller, because that's how they think in terms of, though they've owned it for 25 years and been taking good profits every year. And maybe their number is currently higher than the market wants, or maybe lower, actually. So it starts a lot of times for the family who's selling it, starts with what they remember they spent on the building. The second thing that comes up is, the way my mind immediately goes when they're talking about that, I think about replacement cost. So I know from watching what's going on in hospitality, this is before the inflation, that we're buying resorts, which means there's more than just a bedroom. There's other nice things like restaurants and stuff, right? So let me use the easiest way to think about how much a hotel room costs is Hampton Inn. Really nice buildings, but not luxury, nice. And not really that many amenities. They usually have a lobby and a small kitchenette, right? Those cost $180,000 a door to build.
Okay.
So I always say, if I'm going to build a straightforward, nice hotel room for $180,000, that would be all in, right? Buy the dirt, build the building, and put furniture in it, divide the number, and it'll be 180. Okay. So I always say, well, if I'm paying around 180 for a gigantic resort that has good business already, and I'm buying in a spot that's beautiful, a mountain, a water, or whatever, then I'm already winning. Because I actually couldn't even just build the room for the price I'm paying for all the amenities and the beauty and the history. So we tend to use that as our litmus test. Is it coming in around replacement or to build new? And then the third thing we, of course, do is what is the capitalization if we were to buy this? What will it be worth today with their current revenue, and what will it be worth with our business plan? So we do that simple technique, if you guys haven't been in commercial real estate yet, where we take the profitability at the bottom line, say it's $1 million, and we divide it by 8%. So in our industry, 8 is about right, because
cap rate.
That's our cap rate in my industry specifically. And that would mean it's probably legally, and it's probably by an appraiser worth about $8 million. And so I say, okay, if it's worth about $8 million to the bankers, what happens if I add $500,000 to profit by adding weddings? And that's been our secret weapon. We tell that to everybody. We're buying buildings that are nice and pretty, run by elderly people that aren't even really maximizing the best profitability, which is weddings in these resorts. So we then just do reverse engineering online. We see how many leads are available online. We then say, how much would it cost us to get those leads? How much would it cost to modify the space a bit to make it super fantastic for today's bride? We put that calculation together and we're like, wow, we could drop $500,000 more in 2 years. And now we've just changed the value by $4 million. And we bought it, you see what I'm saying? So we basically do as is value, and then we say what our model builds. And we've watched our model now 5 times with other properties, including the ones we built.
Yep. Is wedding the main driver for the resorts? Is that the primary focus? It is
our technique. It's a part of the business. We care about weddings, but no, it's the answer is yes and no. We need to see wedding industry strength in that asset because it de-risks the entire investment for all our investors, because weddings come in with cash 2 years before the event, 18 months before the event. That cash goes on the balance sheet of our investors, and it adds a layer of security. It also allows us to bring in cash while we're fixing buildings up, which is not normal, right? Normally you shut things down and no cash comes in. We're bringing in at the place I think you're a part of. I think we're currently closed for renovations, and I think we're selling about $100,000 a month in deposits. All in, probably $600,000-$700,000 of cash have come in with no business.
Yeah.
And that's really interesting security to an operating business.
Yep. Still got a liability though, right? Because it's still the customer's deposits, and don't they still have to execute on the? You have to execute on the wedding. We always
have to execute.
Yep.
Yeah. So great question. It's a non-refundable deposit, so it sits on the balance sheet as a liability. It is accessible, and what's more important is it's the beginning of a cycle of perpetual deposits. So it's not like. So there's always deposits coming in, and it adds so much security to your balance sheet. But it absolutely, sits as a liability. Absolutely.
Okay. I want to talk about kind of all the hats you wear. So you've got the syndication business where you're the investor-facing person. I see you put on these webinars and helping raise money. You have the operations of running your existing, like Renault. You've got construction as you're doing in Kent, and then you got acquisitions. You got to keep the lead funnel going. So where do you spend most of your time? Talk about, how do you focus? Do you have scorecards that you measure these things? How do you manage your time between them?
Yeah, no, and you're right about that we always have to dissect how these operations get run. So I would say if you were to rank our personal energy and time, it goes into accountable equity, the investor community. For that community, we believe we're supposed to be asset managing what we own, which means continuing to manage the managers and acquire more, and to be in that education cycle of raising capital through good education. So in a way, that's probably 75% of my week. And we that includes acquisitions. So 75% of our week is in the accountable equity world. And then really the rest of it would probably be in the Viva May world, which is our hospitality management, where we have multiple managers. We have expert chefs, we have expert hotel rooms, and we have a vice president over Viva May called Dan Alicia. And then we have a vice president of each property. So really strong leadership, because our properties bring in a lot of guests every week. We want to make sure everything's safe. So really, I'm spending my time there on the creative side with everyone and the accountability side. And then as far as construction, what we did there was we joint ventured with a very strong construction management group. And really, they are leading our construction. Yes, I have to be consulted, but not really spending too much of my time there.
Yeah, you set the vision, you know what it wants to look like, you got the design, and then you trust that they're executing on that, and you don't have to manage them day to day.
That's true. And at the beginning, to be fair, at the very, very beginning when we started these companies, we obviously had to be directly involved in the construction, and we love that, but we are letting it go and progressively putting the right people in the right place. So we're at a point where we have a joint venture called Hospitality Renovation and Development with a 27-person shop that does construction management all around the Eastern Seaboard, and they can do institutional stuff, structural stuff, infrastructure stuff, but they're someone who we've been friends with and associates with for 12 years, so they're great.
Okay. Are they part of the general partnership to own it long term?
Not yet. That's funny you bring that up, because we're figuring out how much upside they can have, but there is some component of the joint venture that includes upside. Yes.
Yeah. Cool. Let's talk about your people in the hospitality business. Your people are the most important thing. I guess, how do you, number one, identify the right people, but then the harder part, at least in my opinion, is the daily accountability that they are going to deliver a smile and make sure each guest have a positive experience, because you can't watch them all the time. You got to trust that they're gonna follow the rules and the core values that they said they had in the beginning. So can you speak to that?
Yeah, let's speak to that. Currently, our cycle is to be with everyone at least once a week. So we travel a lot. I'm at all the there's only 2 physical properties and the acquisitions right now. The answer is we do a lot of work up front. And I think I've learned this from Jim Collins and some Jack Welch and everybody. We spend the time before they join the team pushing them away. And it's in car business they call it the takeaway close. So we came up with a strategy years ago, because we hire hundreds of people a year now. I don't get to be involved in much of that anymore, but all the executives, of course. And so what we do, and I feel free to use this idea if it helps you, is we have identified very clearly our beliefs about what we're trying to achieve in each of those 3 core businesses. So using Viva May as an example, which is our core, that's where most of our team members is in hospitality management. We came up with this, and you got the best business show here going, but I'll be fast about it, is 3 core values that we want you to know that we care about with all our heart at Viva May. We call them the Viva May Values. First, we say, remember, Viva May is French for revive the soul. So we dig in deep, and we're like, listen, we care about the people that show up. And it's all about the people that show up and showing them a kind of love. So let me explain, Mr. Smith or Mrs. Smith. If you would like to join this team, you're already at this interview because you're the best at marketing or the best at front desk management. So before we go any further, let me just share with you 3 core values. They're straightforward. I'll say them in 1 word each. And if they resonate with you, you're probably in the right place. So joy, humility, and ministry. Joy, humility, and ministry. Not only do we want our executives to love those 3 core values, but everybody that works here, we try to encourage them not to take the job if they don't resonate. So to give you 1 more sentence of explanation about each, we say, joy means the type of work we're asking you to do. Does it fit your personality? Do you love seeing people? We're in hospitality, for God's sake. Do you love people? And does that make you happy? Because not everybody was built the same way, and some people it makes them tired and sad. Maybe this isn't the right fit for you. 2, humility. You may have never been asked it, but do you seek it? Do you see it as a strength and open the door to wisdom? It doesn't mean you have to be a perfect person. It just means, do you see the value and dignity in others, and do you want to help on a team? All of the components and richness of humility are so paramount to our culture. And then 3, ministry. This was the game changer for me 8 years ago, when I was helping take over whenever a manager would quit in the middle of a season. I'd help restaurant workers. I'd help everywhere I could, trying to build those first few resorts. And there is something spiritual that happens in hospitality. Like it's close to people's heart is what I mean. So if you treat it as a ministry, meaning trying to do something good for another and trying to show them love, it transcends the whole experience to something that they will never forget for the rest of their life. And we want you to be able to see the deeper value. So what we say is, when you deliver the glass of wine, is it just so that the wine gets to the table, or is it so the person feels cared for? And focus on the mission. The mission is to show them care. If they want to have a conversation with you, have the conversation. Where they need you, be there for them. So we teach that kind of empathy and that sense of purpose. And we're crazy about it. We do it twice a week. So if you can't make Thursday, you got to make Saturday, or you get taken off the shift. And that rigor, and I don't get to teach them all, but whenever I'm on property, I get to go in and give a 5-minute pump talk. But otherwise, it's our managers, it's our operators. They're the ones teaching this. And by doing it every week in different creative ways, it shows how ridiculously serious we are.
Yeah.
And that sense of conviction reminds you of the great companies. And that's what we're doing here on a very small level, in very simple ways. We're saying that there's something special happening here. We want you here. We care about you. We need you.
So every week you have 2 huddles. So we call
two options. Yep.
Two.
You go to one.
You go to one. Okay. So a weekly meeting. How long is it?
45 minutes,
okay.
If not an hour.
Okay. And then during that, it's reviewing these core values and then kind of going over techniques and strategies, like the glass of wine story, which is I've never heard that. That was very intriguing, actually. So, what's it look like?
Think of it this way. You're so great to ask this. Of all the interviews I've done, I've never been asked what is the agenda of those meetings. It's 4 agenda points.
Okay.
Same 4 agenda points every week. We start with who's in the room, why are we all doing this, what do we need to learn today, so tactical learning, and what's coming up next. So all W's. Who, why, what, and what's next. And when we get to what, it's like, what skill do I need this week? So there's education, brand new education every week, but the who and the why are the most important part. We always say, if everybody forgets the what that we teach this week, they're going to remember how vitally important it was that we took time in every single week to make sure everyone in the room is recognized and identified as a person, and that they have infinite worth and dignity on this team. And if they want to leave the team, if they don't do their task, the whole team hurts. So we start with that, the who. Then we go into the why. We just say, hey, listen, none of this works unless we all know why the team who set it up, 3 core values, that's where the why shows up. We do repeat the same 3 core values every week in creative new ways. We let other team members do it. We do it in, sometimes we'll have literally a Jeopardy game where we'll have all kinds of creative things to just kind of refresh your mind. We're not solving world hunger or cancer here, but we are ridiculously serious that the person who shows up for service deserves our kindness and love. And then we get into what's the training, and we might do everything from how to answer a phone to how to greet somebody who, even if it's not your job, how do you greet a guest in the hallway, to all kinds of little skills. And then what's next, we actually run through. It's hard to believe how busy these resorts are, but they're busy. Thousands of people are here a week. And every time you grab a waiter and say, what band is playing tomorrow? Don't you wish they knew? We try to make sure they know. So every week, every band, every wedding, we try to go over, this is what's happening. And even though you're in the dish area, we want you to know what's going on your resort. So that's our agenda every week.
How many people are in one of those meetings?
We have about 200 employees right now. Okay. So I would say
100 and 100, something like that.
It's like that. It's more like 120 on Thursday and 80 or so on Saturday.
Okay. So the entire team. It's not like it's subdivided by
subdivided.
The kitchen or the cleaning staff or the front
staff.
And
we think they all have their own private meetings. We know they all have their task meetings, but we wanted to remind them that this is it's literally like a football team. The lineman desperately needs the defensive back on the other side of the ball to do his job or her job. So we do go over that. As a matter of fact, you'd love this, Brian. Real quick, here's the trick. When you say the who, a lot of times we'll do everybody announces who they are, and we love when their personality shines. There's the shy people, there's the hilarious people, there's the I speak very little English people. Everybody on the team has a character and a personality.
Sure.
And they have to say 3 things. My name is, where I work, and we have to say, we have a question on the wall. What's your name? What part of the team are you on? And can we count on you? So that's a question mark. So they have to actually declare whether we can count on them.
Do people say no?
No, they don't. They don't. But listen, I always say there's reasons why there's transition every week, and some people don't come back, and we think that's the better way, right? I'd rather hire every week until we get to the people that are on fire for winning with this team.
Yeah, and people are most important. Like I said, human capital is what we have, and we're working on that now. Actually, in our business, which is these weekly huddles, and our teams are a lot smaller per store, 6 people or something. But just getting in that rhythm of, hey, these are what our goals are. This is what we did. This is our action plan and things we need to do differently. Or hey, we're doing a really good job in this area, and then messages back up to the leadership team. And it's a struggle to, I think, for the leaders, the managers, to lead that if they're not comfortable with it. And so, what we're working on now is just holding their hand for the first couple, giving them advice and training until they get the rhythm down, and then they see the benefits of it. So
you just identified our challenge as well, and I have some managers that are incredible trainers and just enjoy the whole technique. Others don't get it or are just shy. So yeah, we need to continue as a company to develop that technique. I like your idea. It's called hand holding for a while, and then let them find their rhythm.
Yeah, because as soon as they see the benefits, then they're on their own and they're good. It's just those first couple until they really get it down and get comfortable. Then it just becomes natural and part of it. So great. Well, what any book recommendations? Things you're reading now, or something you really enjoyed?
Absolutely. If anybody's listening to this, and the book I just read last week was The Hands-Off Investor by Brian Burke, I believe it is. Brian from Praxis Capital. He wrote that for Bigger Pockets, The Hands-Off Investor, and it teaches people about this whole new world of investing the way we all do it, which is still new to millions of people. And then the other book, of course, that I'm a big fan of and giving out all the time is The Obstacle is the Way by Ryan Holiday. Tremendously important to me at different times in my life. I loved that book. I've read it many times.
Fantastic. Well, we will link both of those up. I haven't actually read either of them, so I'll be buying them today. Where can listeners?
Love that.
Yeah, great. Thank you. Where can listeners connect? Find out more about you, Accountable Equity.
That's the deal. I mean, we put our mission in our name, so just type in accountableequity.com, spelled out fully. That's the beginning point. We would love to create community together. We're here to be educators and be along for this journey. So just reach us on accountableequity.com. We have email there. We have phone numbers there. We're here to help anybody.
Great. Well, I appreciate you coming on and being so honest and sharing all these great tips in your story. And I think our listeners got a lot out of it today. So.
And Brian Business with Beers, my favorite title of any podcast.
Oh, awesome. All right, it was great chatting with you, and I'll see you soon.